It is 2 in the morning. The apartment is quiet except for the sound of dry food in a ceramic bowl. A cat, long-haired gray, not eating, sitting next to the bowl, staring at nothing. $32.21 a month. That is the national average for an accident and illness cat insurance policy in this country. According to the North American Pet Health Insurance Association, 2025 State of the Industry Report. And right now, in a one-bedroom apartment in Portland, a 30-year-old freelance illustrator who has been paying exactly that amount every month for the past 2 years is sitting on the floor with a denial letter open on a laptop screen. $2,800, the echocardiogram, the cardiologist visit, the medication. All submitted, all denied. The reason is 4 words long: hereditary and congenital exclusion. The cat's name does not matter. What matters is the diagnosis. Hypertrophic cardiomyopathy, HCM, the most common cardiac disease in cats, according to the UC Davis School of Veterinary Medicine. 1 in 7, not rare, not exotic, 1 in 7. And in certain breeds, the ones with longer fur and rounder faces and specific genetic lines, the prevalence is significantly higher. About 30% of Maine Coons carry a genetic mutation linked to HCM. Per the university's Federation for Animal Welfare, Persian cats, ragdolls, Sphinx cats, Turkish Angoras. The list of breeds with elevated HCM risk reads like a registry of the most popular purebred cats in America. The insurance company knew this before the policy was written. The person in Portland did not. That is the whole story, but it takes a while to see all of it. This person, the illustrator, earns about $3,600 a month. Not a lot of margin, not a lot of savings. Only about 2% of cats in this country carry insurance. According to the AVMA's reporting on NAFIA data for 2024, so this person already did more than 98% of cat owners. Signed up for an accident and illness plan, paid every month, set up autopay. Felt responsible, felt covered. The word covered did a lot of work in that sentence. It carried 2 years of monthly payments and a complete misunderstanding of what the word actually meant. You open your phone to check something, then you close it, then you open it again. The first decision point in this story happened the day the policy was purchased. The illustrator went online, compared 3 or 4 options, picked one with a reasonable premium, an 80% reimbursement rate, and a $250 deductible. Looked at the coverage summary page, accident and illness. That sounded like everything. It was not everything. A 2025 MarketWatch survey of pet insurance policyholders found that 28% of denied claims involved a condition classified as pre-existing. Another 28% were denied because the claim fell inside a waiting period. Those 2 categories alone account for more than half of all denials. And then there is a third category, the one that got the illustrator: hereditary and congenital exclusions. Conditions the insurance company considers genetically linked to the breed. Conditions the company priced into the premium but excluded from the payout. I should mention, Subi, this is public information, not personal guidance. Your life has details I will never know, but the numbers are worth hearing. Here is how breed-specific exclusions work. The insurance company knows actuarially that certain breeds develop certain conditions at higher rates. They use that data to set premiums. A purebred cat costs more to insure than a domestic shorthair. The company charges more because the risk is higher, but many of those same companies then exclude the exact conditions that make the breed more expensive to insure. Peer-reviewed data published in the National Library of Medicine estimate HCM prevalence at roughly 14 to 15% in the general cat population, and significantly higher in predisposed breeds. They charge you for the risk. They do not cover the risk. The premium reflects the probability of HCM. The policy excludes HCM. Those 2 facts exist in the same document, page 1 and page 17. Nobody explains this at sign-up. The coverage summary says accident and illness. The exclusion list is a separate document. Sometimes a PDF link at the bottom of a page you have to scroll past the payment button to find. This is the part I sat with the longest, not because it is complicated, because it is simple. The second decision point happened 6 months into the policy. The cat started breathing a little faster, not dramatically, just a little. The illustrator noticed but figured it was the heat or stress or nothing. Did not take the cat in. 6 months later, a routine checkup caught a heart murmur. The vet recommended an echocardiogram, $600 to $900 depending on where you live. Based on veterinary cardiologist pricing across multiple regions, the illustrator scheduled it. The echocardiogram confirmed HCM, mild to moderate. The cardiologist recommended medication and follow-up scans every 6 months. The third decision point was the claim, $2,800 total. Submitted through the app, denied within 11 days. The denial letter cited the policy's exclusion for hereditary and congenital conditions. HCM, the letter explained, is a known breed-associated cardiac condition. The policy, the letter explained, does not cover breed-associated cardiac conditions. The illustrator had been paying $32 a month for 24 months, $773 in premiums, $0 in coverage when coverage was needed. You put the laptop on the floor. You sit there for a minute. The cat is next to you. It does not know any of this. The system is not broken in the way most people think. The system is not accidentally excluding these conditions. The exclusion is the product. The premium is the price of the feeling of being covered. The exclusion is where the margin lives. The AVMA reported that the U.S. pet insurance industry reached $4.7 billion in gross written premium in 2024, the fastest growing segment of the insurance industry. The NAFIA State of the Industry report documented a compound growth rate of 20.8% over the past 5 years across North America. And the structure that makes that growth possible is the gap between what the coverage summary promises and what the exclusion list takes away. Nobody at any of these companies lost their job when this claim was denied. That is worth sitting with for a second. The illustrator could have read the exclusion list before purchasing. That is true. That is the defense the industry would offer, and it is a fair point in isolation. But isolation is not where people make these decisions. They make them at 11 at night after a vet visit that scared them. They make them on a phone screen, scrolling fast, looking for the monthly price and the reimbursement percentage. 2% of cats are insured. The person who actually signs up is already more engaged, more responsible, more worried than average. And the system rewards that worry with a product designed to feel comprehensive and perform selectively. The fourth decision point, after the denial, the illustrator now has a cat with a confirmed heart condition and no insurance coverage for it. Annual HCM management costs range from $2,000 to $5,000. Depending on severity, according to veterinary cost estimates for advanced stage cases. Medication, follow-up echocardiograms every 6 months, possible emergency visits. The illustrator earns $3,600 a month. After rent, utilities, food, and the student loan payment that never seems to move, the margin is thin. The options are a credit card, a veterinary financing plan, or rationing care. CareCredit, one of the most common veterinary financing products, carries a standard APR of 32.99% for new accounts, per its published terms as of mid-2024. It offers a deferred interest promotional period. If you pay the full balance within the promotional window, you pay 0 interest. If you do not, the interest is applied retroactively to the full original balance from day 1, not from the day the promotion ended. From day 1, a $2,800 vet bill that is not paid off in time becomes a $3,700 debt, then a $4,000 debt. The math does not slow down. It does not care that you love your cat. Start with $32 a month, multiply by 12, $386 a year. Multiply by the average lifespan of an indoor cat, roughly 12 to 18 years according to multiple veterinary sources, including the AVMA. Call it 15. That is $5,790 in lifetime premiums. If the most common serious feline cardiac condition is excluded from coverage, what exactly is the $5,790 buying? It is buying the accidents and the illnesses that are not linked to the breed. It is buying the things that are statistically less likely to happen. The expensive thing, the thing you actually bought the policy for, is on page 17, under exclusions. That is not just money, that is years. Years of monthly payments, years of believing the math worked in your favor. The number on the screen is dollars. The cost is time. This person made the same decision you would have made. Every single one of them seemed reasonable at the time. Compare plans, pick one that fits the budget. Pay every month, feel covered. Trust the word on the summary page, skip the PDF. There are things you can do, not things I am telling you to do, things that exist. You can request the full exclusion list before purchasing a policy. You can search the specific breed of your cat, plus the word exclusion, plus the name of the insurance company. You can look for policies that explicitly include hereditary and congenital conditions, because some plans do exist that cover them as long as the condition was not present at enrollment. You can ask the insurer directly, is HCM covered for this breed? You can get that answer in writing. You can do all of this before you hand over the first $32. None of it guarantees anything, but it changes the information balance. And the information balance is the only thing the system responds to. The apartment is still quiet, the bowl is still full, the laptop is closed now. $32 will come out of the account again on the 1st of the month. The policy is still active. The condition is still excluded. The cat is asleep on the couch. It does not know the difference between covered and not covered. It just knows the apartment is warm and the person is still sitting on the floor.